Marc Ostwald from ADM Investor Services International joins us now. You know, Marc, I'm just wondering, are the markets starting to not second-guess Donald Trump, but get the measure of the man? And is that why we're seeing a more muted response?
To a certain extent, I think markets are definitely getting used to this back and forth that is very typical of pretty much any bit of policy implementation from the new US administration. It's also the realization that the back and forth doesn't actually change anything materially, and it's better to wait and react to what is actually implemented from a long-term basis rather than a short-term perspective, and then evaluate it then as is needed.
Of course, come the beginning of July, when all these deals with so many different countries are meant to be concluded, and as Tony Waterman made the point a little earlier, these deals can normally take years, not a matter of weeks. Do you expect the market to go into a jittery cycle again?
As we get closer to particularly the lifting of the 90-day moratorium on reciprocal tariffs, yes, I would imagine without, unless there are material movements in trade negotiations with the bigger countries or blocs, EU, Japan, South Korea, most notably, then markets will start to get nervous about whether they're going to be extended or not. The primary assumption is, above all with the negotiations with China, is there's almost an assumption of an automatic extension because markets acknowledge how complex that is.
Let's move away from tariffs and focus on this big, beautiful tax bill. It's making its way towards being finalised. If it goes ahead, what market reaction do you expect to see?
Well, I think markets are basically assuming that whatever comes out of this, and the Senate proposals in terms of changing what was passed in the House of Representatives assume even bigger tax and spending cuts, which will probably have an even bigger material negative impact on the US budget outlook. So markets are anticipating that they will need to continue to pressure US bond yields higher, and over time, obviously, that long-term, the higher long-term interest rates, which one would have to add is not just a phenomenon in the US, but also above all in Japan, to a certain extent in the Eurozone. That is something that they're going to have to factor in, and that will have a negative impact on corporate earnings over the longer run.
Thank you so much for chatting to us today. That, of course, is Marc Ostwald. He is from ADM Investor Services International.